Hi, I'm Bryan Petersen, and welcome back to Accountants React. Today's Accountants React video is one of my favorite videos. It's a scene from Schitt's Creek where David learns what a write-off actually is, and it's extremely entertaining to me and other accountants in the world, and I'm sure it'll be entertaining to you too. Here we go.
Sure. What's this? Looks expensive.
This is some new bedding.
David, didn't I just tell you to save your money?
Yeah, I am testing this out for
Pinch
the
your
stores,
pennies.
so work is paying for it.
Work is paying for your bedding?
I was gonna leave, but no.
Magical work people are paying for it.
What is that? Is that a new lamp?
Yeah, I'm thinking of bringing homeware into the store, so that's a write-off.
That's a write-off?
Yeah.
Do you even know what a write-off is?
Yeah, it's when you buy something for your business
No.
and the government pays you back for it.
Oh, and who pays for it?
Nobody. You write it off.
Who?
Okay, this is extremely interesting. Every time I meet with a client that talks about write-offs, the one thing that is a common misconception is that they think when you write something off that some magical being, i.e. the government, is going to be paying you back for that said expense. And that is just not the way it works. A write-off means that you're lowering your income, which means you're paying less tax on your profits. See, you only pay tax on profits. You don't pay tax on revenue. You pay tax on after expenses. And that's what a write-off is. A write-off is an expense to go against your income that reduces your revenue down to a profit level. And that profit is actually what's actually taxed by the government, depending on your tax rate. Very common that people don't understand what a write-off is. But to think that someone else is going to be paying for your expenses is just not going to happen.
Writes it off?
I don't know. The write-off people. What? Why are we having this conversation?
So if I need booze to get through my day,
Magical write-off
I
people.
can just write that off?
That's a stretch.
But the skincare products you got this morning, those are a write-off.
What skincare products? You purchased skincare products?
Okay. I am the face of the company. If I have acne, what does that say about the legitimacy of the store?
That's not a write-off. That's not a...
So skincare products, if you're using them personally, are not write-offs. And whether or not you look good for a job doesn't matter. Years ago, the government introduced these rules when it came to doctors. And doctors what they were doing is writing off their suits. And they were saying that those were business expenses because they needed to look professional for their job. Well, now, specifically denied in the Income Tax Act is clothing and other cosmetic things that people deem to need for their business. Okay, so hairdressers can't write off the shampoo or the conditioners or the dyes that they put in their own hair, although those are sometimes, let's call them lost in the supply chain. Just like doctors, lawyers, and whatever else can't write off their haircuts, neither can the hairdresser. In this case, you can't write off skincare products. Now, booze is maybe a little bit of a different situation where if you are entertaining your clients, alcohol is actually allowed in certain conditions, okay?
Write-off. This? Not a write-off.
Oh, well, the bedding's non-refundable.
David, a write-off is a business expense used to reduce your taxable income.
Yes, it is.
Okay, well then, why isn't it called a tax write-off?
It is! It is! You can't just buy things for yourself and write them off.
Well, then I'll return some things.
Yes, return
There's
everything
not
you
enough
have.
space in here for the massage chair anyway.
I should get back to work, just in case any more of your packages arrive.
So you should only expense or buy things that your business actually needs, okay? You're going to have a cash flow problem if you just continue to buy stuff that your business doesn't need. If you buy vehicles for your business and those vehicles can be $30,000 vehicles, then buy the $30,000 truck, okay? Don't buy the $85,000 truck because that's not what you need. And if you're a corporation and your tax rate's 11%, and you're spending an extra $55,000 on a truck, you're only going to get back 11% of that $55,000. So the remainder of that is still coming out of your pocket. It's still an expense. It's still, negative cash flow to you. So don't ever do that. Okay. You buy what you need in business. You save all those extra stuff for all the fancy things for your personal life, if you so choose to do that. But in business, to survive, you need to only expend what you need to spend. Okay. Don't spend anything more than you need to. I hope you guys enjoyed the video. I sure did.